Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, who's not here this morning. Why are you expecting Bob to be here this morning? He'll be here this afternoon. It's Thursday. Well, I'll pass along all the thoughts. Maybe he'll pop on. I don't know. Haven't spoken to him yet this morning. What do I think about the PPI data? It came in hot. Coral came in a little better, but market pretty much shrugged it off. Good morning, Lauren. Good morning, Patrick. We'll see what happens at the open, though. Aloha, Waka Waka. Good morning, George. Good morning, Jacob. Twitter been down this morning. I know it was the Twitter crisis. The crisis with the Twitter. Yen lowest at the dollar since 1998. Yeah, the dollar is super strong. I think that's a given. So another bad news rally. We'll take a look at everything. I got some key levels for today. Again, who knows? Until we break these key levels, it's hard to get completely bearish because there's too many people still, even on the street at a professional level, who only been there since we've had money pumping. Since the last big '09 when they started pumping money into it, and they just expect, hey, markets are going to get saved by the Fed. They're going to start, even if they hike, they're going to start pumping again. They're going to do QE again. The markets will be fine. So let's just keep buying the damn dip. Buy the dip. Hello, Christoph. Good morning, Anissa. Good morning, Ramsafal. All right, let's take a look as we already alluded to. Oh, well, real quick before we get to that, just please do consider subscribing, ringing the bell, and hitting the like button there. That's out of the way. Leave some comments too, please. We got important stuff to do. We got important stuff to do. All right, PPI. You can see month over month forecast 0.8 actually coming in at 1.1, which is really hot. We'll get the continuing jobless claims coming in a little better than forecast. The initial jobless claims a little higher. Core PPI came in a little better, but year over year came in hotter than normal, and the just the overall PPI came in much higher than normal, and that a lot of it was due to gas prices. That's what was reported. A lot of it was due to all the gas prices and that being major inputs to the producer price index, and that's one of the reasons it ramped up highly. Now gas has eased a bit. Whether it stays at this elevated level, we shall see. Not expecting unless oil really collapses, but still, we're it's going to stay elevated for a while longer. But this might be a peak print of the PPI this month. The S&P pretty much nowhere to hide. This is the heat map. Again, you see oil stuff getting hit, but there's pretty much nowhere to hide yet this morning. Financials getting hit. JP Morgan and Morgan Stanley both missed on earnings. So that's all. By the way, FOMC is really now pricing in the CME groups rate projections, which is based off the way the futures trade, is like literally favoring that 100 basis point hike. And we talked about how yesterday the Fed speak was it's not off the table. Let's see how that's reiterated today with Waller speaking and still in negative gamma. So we also had, JP Morgan, Morgan Stanley, also TSM. I don't know if that's on here, but Taiwan Semiconductor. Yeah, it is. There it is. TSMC. Didn't see that there. They actually had a slight beat. All right. So where do we sit? Last night we had that double playing out and then just collapsing, trying to find the bottom right here. I got my significant levels I'm watching for right now. Minor level is this 37.48. You see if we roll back in time, we're at that all this bottom I keep talking about. So we now start breaking this 37.50 area, broken multiple times, and now it's this 37.41.25. So if we start selling through there on the open, unless it's major momentum, which is have to go with that. If it's minor, then want to watch for that. Then the break and then the rollover 37.15 to about 37.09 is the next level. Then 36.89 to the downside. And then we have the retest of the low areas from back on the 16th of June. But that would be a really huge sell-off if we hit that. So I'm really watching. If we do break below this, I need a break and a retest unless there's a massive momentum break. On a rally, my significant level now is we got the 12.5% harmonic 37.64, and my significant level is 37.67. That is a pretty decent significant level on a 1 hour basis. So that's going to be key, that if we get through there, then I got to play for the pop higher, and I'll watch the other side of the rotation zone with this 37.79 area if we do break through that on the open. That's very key. Remember, we have consumer sentiment still coming out tomorrow. Cycle's getting to the bottom on the daily, but not yet turning up, and looking like they're getting to the top on the weekly. So it's going to be very interesting to see how this week closes. But today is definitely tactical trading day. And by the way, on a more substantial rally, if we get another big rally, a snapback rally, my highest level is 38.19. And that's coming in. That's another significant level based off a 1 hour or a 1 hour time frame. But you can almost see it here on the 4 hour. It's also, you can see the 4 hour top of the rotation zone and the daily rotation zone coming in there. So if we did get another big rally, a snapback rally like yesterday, those are my full targets. And again, still long term bearish, but can't tip overly bearish until we really can prove we break down below this level. The market doesn't make any sense. The market's not supposed to make sense, Coco. It's not supposed to make sense. So don't try to make sense, especially in bear markets like this, because it's held up. Again, you have a lot of people out there have not experienced a bear market. They started trading after 08, 09, and they've been in the realm of Fed will always save the markets, and they're still expecting it. Key thing I'm watching for, you had that double on the NASDAQ that also came down. I'm watching this. It confirmed but not triggered. I need at least a 15-minute trigger on this above 11, 678, 677.75. So I need to close above there. 11,714, unless we got rip your face off momentum. 11,714, 11,773, and 11,750. By the way, I have a significant level. That's why these see this level. This is pretty significant on a 1 hour time frame. So if we did get above that, I'd be watching for this higher price action. And then the next significant level on the 1 hour time frame is about 11,758, which completes the double target. So that's my upside targets. If we do rally, my breakdown area, minor, is coming in 11,637. Major starts getting below 11,600. 11,600, then I'll be retesting the low areas from yesterday. And the shorter term harmonics, which would be these. So again, look at, we got a harmonic cluster right there, 11,570, and then I'd be targeting 11,537 with this little hitch area that created the momentum off the open yesterday. So those are both the high and the low levels coming in there. Dow, I'm really paying attention to, because the Dow is weakest this morning. It's now already breaking down. And the Dow coming in, my next target, I'm still using the harmonics. This is about 30,140, and that's right at this little bottoming area. See here. And you got the harmonic, and then breaking down from there is a 29,950 area on a rally. It's now broken below the 1, 2, 3, 4, 5, 6 test areas. So that is now my major resistance on a snapback rally. I'm going to put that in. It's roughly the 12.5% harmonic right there too. So that's what I'll be playing for. If we do get a bigger rally than that, I'm going to 25% harmonic with the declining rotation zone. Now, if we also close below some of these key support levels, then that starts getting me into more medium-term bearish mode as long as we can sustain that into the close. The Russell also pretty weak, trying to break below this key support here. If we do get momentum to the downside, major support coming in at 1685 area. See right in here, and that's a major support level. Once that breaks, it's not good for the Russell. On a rally, it's 1717 is the key level. VIX 2808, thank you. Let's just peek at the VIX right now. Thank you for putting that up because I don't get real time in this platform. I'd even pay for it for you guys just to put it up here. Thank you. 2808. Again, mine's delayed, but 2808. Really watch if the VIX starts breaking above the close from yesterday. Oh, sorry. I'm going off this 4-hour close from yesterday. Or this key gap open. I'm sorry, the key gap open of about 2850. Well, I don't know where my head is. 2850 is key for me with this gap open that was filled. If we start getting above that, we're at 2808, then I'm going to watch for accelerated downside with some VIX momentum to the upside. That's my key area. Notes, still keeping an eye on this. Now, if we pull back down into this area, let me pull this line off. If we pull back down into this area, then this potential double is now a triple, and I'll be watching for a little bigger pullback into there. So that's what I'm keeping an eye on. And still, I need a longer-term close, at least a 1-hour close above this to confirm this double, but that could turn into a triple any moment now. And then I'd watch for the bigger bottoming pattern back between the 50 and the 62.5. So, dollar index, as we talked about, still pushing higher. My next target is 108.95. So, we'll see about that. Euro retesting the low area, so could not sustain anything. I said move up the stop on that little double bottom, and that little double bottom on the aggressive 1-hour. Sorry, you see that is now a multi-bottom here. If it does break below this parity again, I've updated the levels. I'm watching 99.84, then 99.69. But now this is, and by the way, this is not a head and shoulders. It's not reversing a pattern. It looks like one, but it's not reversing a pattern. It's now a triple bottom, which slightly favors the continuation move. So keep an eye on a potential another euro breakdown. As somebody mentioned, I forgot who mentioned that. Thank you for putting that in. Josh mentioned it. Good morning. Yen lowest against the dollar since 1998. And you see 139.17 reacting at that harmonic level. Wow. So my next intermediate target before 140.60 would be roughly 140, but I'm now watching for a potential little pullback here, and 138.46 is key support for me. What else haven't I touched on this morning that's important? The old Bitcoin. The old Bitcoin trying to pop on, trying to hold this channel. Celsius declaring bankruptcy. This is going to wipe out a bunch of people, but we really need to break below yesterday's lows for me to get aggressively bearish in that. Tesla ahead of self-driving. Karpathy officially left. He's been on sabbatical, but again, Tesla not down much. We still have the little 15-minute double that earlier was trading by the full levels, but I'll watch for the gap fill and then the rollover play unless the NASDAQ gets super strong with that. Again, the key area I'm watching on a closing basis is the 688, 687. Just to touch on some earnings plays because there could be some interesting stuff. 107.78. This was a key level right here. JP Morgan again missed on both earnings and revenue. So that's a key area right there. I'll watch if we do get any strength in the market for a potential partial gap fill. Now major resistance is coming in at 110.80. So if the market's strong, I'll watch for a potential pullback and rollover play on that. but longer term still in massive bearish mode on the banks. And Morgan Stanley did not have as big a gap down, but I'm watching again. The rollover play would be, it's actually sitting above my key level right here. So there might be a quick little gap fill play, but we start getting below 74.12, then I'm targeting these most recent lows. I have already set those up for my key things I'm watching. Taiwan Semiconductor was a slight beat, but again, this will be another longer term rollover play for me, especially if it can rally back into the weekly rotation zone. It's coming off this area of trying to find a little bottom, but again, still watching for that double to complete. And if we break below that, I'll return to about $60 long term. You're just very, very bullish, Tom stock. SPY, you're going to have your gap down. Can we rally back to 386? I know. You're not going to rally back to 386 today. No, even if you rally, you're not rallying back to 386. Your key levels now 373. Your minor level is going to be, let me see here with the 1 hour. Try to find a good level in here. There's your good level. If you do, you're gonna first play is to return to about 375, 375.12. Next play is 376.56. So those are your two upside. You start breaking though below 372.16. I'm returning to 370.70, and then you have a potential gap fill play to the downside, and the full gap is down here, but I'd target the breakout area 367.92, and that's for not just today, that's for the rest of the week. Qs. Again, your Q levels, let's see what I can find here. There's not a lot of fantastic levels, so I got to go off the harmonics and the prior gap fill. So if we did rally, first target would be about 284.15, and then on a rally 285.57. To the downside, there's not much coming in here. You can see with this clear path move, 283.20 is where we're trading. You're against this 283.48. So actually, that's my first resistance, 283.50. And then I got to use the harmonics with this little low in the key close, 282.15 and 280.13. You're always in rally mode, Tom stock. Right now, I'm in long-term bearish mode, but tactical trading short-term until if we really get momentum on the S&P below 37.41 now. That's what I'm watching. And then I start getting into the retest of the lows. And then those are the longer-term plays for me. What else do we have? I think that's about it. Everything I want to cover right now. So I hope everyone has a fantastic trading day. Not seeing any, the silver slaughter continues. Silver and gold, there's going to be some great opportunities, but it's hands off. Remember, you got to lighten up before you reestablish when trading around the core position. That level did not hold, so now my next, and it looks like we're right at the 62.5. If we close below this on a weekly basis, then I will start targeting back down in here, especially back to that $14. So it's literally hands off. And gold, just your longer term levels. Let me pull some of this off real quick. Your longer term levels on gold, your key from the COVID lows. These are hands off until we get a stronger. Gold still my key levels about this 1695. I get a close. That's where I'm watching for support in that area, but we start getting a weekly close below that because you got a lot of support. Then it's hands off even on gold and watch for the bigger pullback. Already went through the Russell dark screen sleep, but I'll recap it real quick. I'm just going to use the futures, and you can translate it to IYT. Again, your key support level is this 1700. You break below there, 1683 on a rally. Major resistance to 1716. Hey, Rich, thanks for being here. Did Euro hit parity again right now? Yeah, it's actually below parity again. So Euro getting hammered this morning. Strong dollar. Hey, thanks, Remsafal. Again, if we have something major happen, especially to the downside, I'll come on during lunch. If we rally, bounce back, or there's choppy conditions, I'll just show up after the close, and Bob should be on this afternoon. With that, let's call it a day, or at least a morning, and I'll talk to everyone later. Bye for now.